Clerk will read.
Next bill is 5066. Mr. Elliott. It passed judiciary favorably with amendment number 1, which would be the committee report.
Mr. Elliott is recognized to explain the amendment. Mr. Elliott.
Thank you, Mr. Speaker. I'll explain the amendment, which is a strike and insert. This bill comes to us from the Liquor Liability Ad Hoc Subcommittee, so I'd like to thank Mr. Bailey, Mr. Moore, Mr. Rose, Mr. King, Mr. Robbins, Mr. Wheeler for helping with this over several months. As you all know, after 2017, the General Assembly, through an enactment, required that folks who have serve alcohol after 5 p.m. establishments must have $1 million of liability coverage. As you all know, probably like I have, you've all heard from folks in your areas who are having problem getting coverage and the cost of the coverage. So this bill seeks to address that issue. It's done through mitigation measures. So the bill would have it that you could get down, if you take the mitigation steps, to as low from the $1 million to $250,000 of coverage, but no less than that. If you are a nonprofit or if you're a single event permittee, you would start at $500,000. If you stop serving alcohol at 12 a.m., you would reduce it by $100,000 till you get down to 6 p.m., which would reduce it to $300,000 if you start there. But also you would get $100,000 off your $1 million requirement if you have alcohol server training. That would be voluntary. That would be done through the Department of Revenue, SLED, and DEOTUS. But if you did that, you followed those requirements voluntarily, you could get $100 off. If your alcohol sales are less than 40% of your total sales, you would get another $100 off. But again, no less than $250,000. Also, the amendment specifically states that if you are if you serve alcohol, sell alcohol in your establishment, you could participate in a captive insurance market. That's the law now, but we're making that's not precluded in the law, but we're making that clear. Also, it requires that insurers have to provide premium discounts if the insureds take mitigation steps in serving alcohol. Mr. Speaker, that explains the amendment.
Thank you. Mr. Gatch is recognized for a question. Mr. Gatch.
Thank you, Mr. Speaker. Mr. Elliott, thank you so much for this amendment. I am in complete support of this amendment. Do you know that in Summerville, South Carolina, I represent Dorchester and Charleston counties, and there are a lot of business owners that are being negatively impacted by really huge rate increases?
I do, and that was the urgency of doing this bill, and to make sure it's a balancing act between protecting victims who are victims of alcohol-related incidents, and it's also balancing the economic interest of our business owners, and that's what we seek to do here. And I'm hearing the same thing you're hearing, Mr. Gatch, from all over Greenville County and all over the state.
Thank you, Mr. Elliott.
Mr. Ott's recognized for a question. Mr. Ott.
Thank you, Mr. Speaker, and thank you, Mr. Elliott. Thank you for allowing us to talk about this. Thank you for acknowledging that there is absolutely a problem. Thank you, for acknowledging that first and foremost. My question is, how does this amendment deal with what I hear a lot of complaints surrounding about joint and several, where there may be a venue that sells an alcoholic beverage at 1 p.m. in the afternoon. And then that particular patron goes on and frequents other establishments, or may even go home, right? And then, continue to drink, and then something happens. It's my understanding, I've been told that bar right now can be held 100% liable if someone goes after them. That even though it was a situation similar to that, you don't have to be above 50% liable under our current law to still have to ultimately be the one to defend yourself against, the liability coverage or paying out that $1 million mandated policy. Does this amendment do anything with regards to that?
Mr. Ott, thank you for that question. This amendment does not. This deals with mitigation risk and insurance. The scenario that you described, I've heard, we've all heard that. I took note of the fact that our current liability system was in, the one that we're operating under now was in place prior to 2017. So the current liability system we're under was in place prior to the requirement of the $1 million insurance requirement. I would remind everybody too that if you are an establishment that serves alcohol, you would still have to be proven that you were negligent and that your negligence was the proximate cause of the damages.
Right, and you know, but I mean, even though it would have to be proven that you were negligent, you would, I guess, still have to defend yourself against the allegations that you were, which is what.
Well, that's what any lawsuit's about.
That's what any
But you would, through this, to your insurance carrier, and you're required to have the insurance, currently at $1 million. If the law passes down to $250,000, your insurance carrier would defend you against that.
Right, so what you're telling me now is this amendment would allow any establishment, or we're talking about establishments that serve alcohol.
Establishments that serve alcohol after 5 p.m.
Correct. So we're allowing them now to take it upon themselves to do certain things that will be able to limit the mandated coverage that we are putting upon them here in the state of South Carolina.
Correct.
But how is that? That's going to be the coverage, correct?
That's going to be the minimum coverage which they would be required to have.
And so you're saying that's how we're going to drive down costs?
Let me think about it this way. If you have a $100,000 coverage on your vehicle, I would expect that your premiums would be higher than that than if you had the minimum coverage on that $25,000, $50,000. So if I have it on my car, my house, and I have a higher coverage limit, then I would expect my premiums to be higher. So the goal of this is what's possible and what's probable. We're here today. We got to get things done by Tuesday. I'm here from all over the state that folks who their businesses sell alcohol, that they're not being able to get coverage and their premiums are way too high. This is what we're doing here and now to address that through these mitigation steps that would allow from the required $1 million coverage now down, if you take the mitigation steps, to as low as $250,000.
And I appreciate that. Just help me understand. Am I wrong to look at this from the perspective of we're not really lowering the costs? We're not really lowering the costs on premiums. We're lowering the mandated coverage. And so if you're not getting as much coverage, it's not going to cost you as much to purchase it. That's fine. But we're not doing anything to drive the cost down. So how do we know that this is going to bring providers back in? They're still going to be just as at risk because of our joint and several laws that we have here in this state. And I'm concerned, why shouldn't I be concerned that that's still going to keep certain insurance companies from writing these policies?
And I mean, the overall environment, I would again remind you that the liability system that we're currently under, we were under that prior to the 2017 requirement of $1 million. We're taking steps to mitigation steps that each establishment would voluntarily take it upon themselves to engage in these mitigation steps. That would spread across the whole state. We're also requiring insurers to provide premium discounts for their insureds who engage in mitigation factors to reduce the risk. So the overall environment should be one where risks are lower for the insureds and the insurers.
Mr. Hart is recognized for a question.
Thank you, Mr. Speaker. Mr. Elliott, I appreciate you taking those questions on joint and several liability, as it was so not articulated correctly. I don't plant peanuts. I don't plant wheat. I don't farm. So I also would ask that people who don't practice law not ask questions about a very complicated law of joint and several liability. So what Mr. Ott was speaking was not correct. Joint and several liability, if you're going to be held responsible, a jury would have to find you more than 50% responsible. And along with what you just said is that you still have to go in and you have the opportunity to defend yourself, to show that you didn't get this person all liquored up and put him behind the wheel would have killed someone out on the road. So let me ask you this. We're dealing with the mitigation risks and what's causing the rates in South Carolina to be so expensive. Was there any testimony about the top 3 insurers of liquor liability in South Carolina? during the committees?
I think I know where you're going. There was not about the top three. What we did hear anecdotally, and what I'm hearing is that insurers, less and less insurers are in the market for this line of insurance.
Right, but let's talk about the top insurers who provide liquor liability in South Carolina. Do you know which ones those are?
I do not know them by name.
One of them would be the Hartford Insurance Company. So the Hartford sets premiums for liquor liability for bars that sell.
Sorry to interrupt you, Mr. Elliott. Your first 10 minutes on the amendment has expired. Do you wish to have a second
Yes.
10 minutes?
Yes, sir.
Okay, Mr. Elliott is recognized for a second 10 minutes.
Thank you, Mr. Speaker. So the Hartford sets those premiums and increases the premiums for bars and restaurants that sell beer, liquor, and wine, alcoholic beverages. Has anyone looked at the pay for the CEO of the Hartford Insurance Company?
You're probably going to tell me what the CEO makes.
I won't tell you what it is, but I would tell you that you would be gobsmacked to know what the CEO's annual salary is. And the reason why I ask you that is because, and I mentioned this earlier in our presentations, dealing with insurance companies. The rates for insurance companies for liquor liability is not increasing because of bars and restaurants are serving people alcohol or over-serving. I think it's being raised because of the corporate greed of insurance companies. And going back to this now, if you remember a couple of weeks ago, and I had a lot of people who asked me if I could clarify this, which is why I'm clarifying. State Farm, which also provides liquor liability in the state of South Carolina. Did you know that? So in 2022, they paid out. Now this is paid out. This is what they paid. This came out of the pockets of State Farm. They paid out $7 billion in claims. They paid it out, right? So that means after they paid it out, do you know what their bottom line was after they paid $7 billion in claims out?
I do not know.
It was over $130 billion in profit. That's after they paid the claims. So these insurance companies that are coming to us saying that, look, we got to raise the rates, that's just not accurate. It's not the truth. They're not telling the truth about the reason why they're raising the rates. They're raising the rates because of corporate greed, not because of liquor liability. The other thing about it is, which Mr. Ott mentioned, about joint and several liability, which was not accurate, what he was saying. And it's best that if you get up and you talk about the law, that you know what you're talking about. And what I mean by that is, look, if you're a bar in a restaurant in South Carolina, if you get someone liquored up, I think you bear the responsibility for what happens when they get on the road. Because you should be able to assess if that person is intoxicated, over-intoxicated, before you serve them alcohol. That's at 1 o'clock in the afternoon. That's at 3 o'clock in the afternoon. That's at 1 o'clock in the morning. It happens a lot in the state, but I think the truth should be told about why the premiums are being increased in South Carolina.
All right, seeing no more questions. Ms. Lane, I think he's left the podium, so pending question is adoption. All right, Mr. Ott's now recognized to speak on the amendment.
Thank you, Mr. Speaker. Just want to take an opportunity to make sure, first and foremost, that I make myself very clear that I do not have a law degree. My colleague was correct when he said that. That's not something that I'm ashamed of. I've got constituents that have called me about this issue. So I'm not going to sit there and listen to someone tell me that I'm not allowed to ask questions to try to understand the issue. And I would encourage each and every one of you in this body to do that. I don't think there's anything wrong with doing that. I think the problem is, for a very long time, that didn't always happen. And so that a lot of our colleagues that may be in that business were able to sit up here forever and write laws the way they wanted to write them. And then they go out, and then they make a lot of money. Find it ironic that we're going to talk about salaries? I think everybody involved with very tragic situations are making a lot of money off of this issue. So it's something that we need to talk about. And I'm not going to sit there and be berated for asking questions. There's not anything wrong with this bill. I'm not saying that there is. Do I think it solves the entire problem of what we're trying to figure out? No, I don't think it does. But I'm going to keep asking questions to try to get to that point, and I would encourage all of you to do exactly the same.
Ms. Landon has a question. Do you want to ask questions, Mr. Ott?
Yes, sir.
All right, Ms. Landon.
Thank you, Representative Ott. I appreciate what you said very much. Like you, I am not an attorney. However, I've had an insurance license for 39 years, and although I do not handle property and casualty nor any kind of liability, I know how to measure risk, or I understand the process. And I think it's important that people know, all of us, I'm sure, have seen what happens to our small businesses in town. In our own community, we had the VFW affected by an unbelievable increase in their rate, and it almost shut them down completely. And they just do that as something as a, when they have their veterans come in, occasional. It was a real struggle to get that fixed. But when we look back on what actually has happened here, sir, I'm sure you, like me, have some background that relates to things like the fact that prior to 2017, we had 35 insurance companies doing business with this kind of insurance. Did you know that?
It's my understanding.
Yeah.
Yes, ma'am.
And when that new law came into place that required all these companies to be, all these servers to be insured, unfortunately, what ended up happening? I'm sure from a free market viewpoint, what ended up happening?
Well, I'm not exactly going where I think you're trying to take me, Representative Landing. I think that you can go back and look over time and you can see that, yes, we've had insurance companies that are no longer writing policies. They have left. And again,
it drove them out of business. They just couldn't do it. They couldn't make it work.
If you're saying it drove the insurance companies out of business,
I don't mean that they left the business entirely, but they left the state of South Carolina. So the reason we only have the Hartford and a handful of other companies now is the big guys are the only ones that can make it work. But unfortunately, it has pushed prices way up. Our businesses don't have the choices they had before. And so it concerns me to some degree. I know we need a solution to this problem. My concern is that we as the government getting involved essentially in becoming the backstop insurance policy here, this is creating a whole network of additional concerns and risk. And I just want to say, if we would take a look at reducing risk, going back to a more free market solution might be the answer.
I understand that, Ms. Landing. I'm not, again, that's what I'm saying. I'm not necessarily concerned with the minimum coverage all the time. I think that a lot of times, I look at our car insurance. I think there's a lot of times that the minimum coverage, $25,000, I think, on minimum car insurance is not always enough. I think, I can tell you a situation, personal situation, that we had someone that collided with one of our farm equipments on the road, ran into the back of it, and that was gone. $25,000 definitely doesn't cover the cost of replacing that piece of equipment. I think, though, a lot of times that it's the litigious environment that has almost been cultivated for a long time. That is, I think, to a point where we need to obviously try to make some changes. So I don't, again, I don't know that it's the coverage, but something is happening, and if that's the direction the body ultimately wants to go, to try this to see what the impact there is, then okay. But I think there needs to be a willingness to say, if it doesn't accomplish what we're trying to accomplish, which is keep people safe. That's why I don't think this, Ms. Landing, is an argument necessarily. I don't like how we get pushed into corners. There's not anyone in this room that doesn't want someone that is involved in an accident right, to not be taken care of the way that they should be taken care of. But if you say that we've got a broken system right now to try to keep people in business, well, then you automatically are put in the corner of being against victims or families that have suffered some type of horrific accident. That is not the case. And then that's why I don't like that if you're on the other side and you're trying to make arguments on behalf of families that have been involved, well, then all of a sudden you're just completely against business. Neither one of those necessarily have to be true. But when you start pushing people into the margins and off to the side to push them into these camps, again, that's when it makes it very hard to find workable solutions to our problems. So that's why I'm not going to be put there, if that makes sense to you. Thank you, ma'am.
Thank you.
Mr. Kilmartin's recognized for a question. Mr. Kilmartin.
Thank you, Mr. Speaker. Representative, you know that I am a restaurant owner, correct?
I think I've read that a few places, Mr. Kilmartin.
Yeah. Did you know I also own a cigar store? Do you think I'm qualified to ask questions on this, being somebody that's had
We're
the
all
Hartford
qualified.
insurance for years and years?
You know, I'm sure, I understand that we talk about issues, and I have to be very careful about that as well, Mr. Kilmartin. We all come from positions of expertise. There is no doubt about that. Mm-hmm. And I'm not going to even try to pretend that I might know this issue as well as some of the attorneys in the room. But yes, clearly I believe that we are all qualified to ask any questions that we want to, because we are sitting here by the same number of constituents dispersed across the state. So, and I don't take offense of anyone that would say that. I understand some of our issues get very hot and emotional. So we'll just move on from that.
Yeah. Did you also hear that my insurance, I think I had about 10% of my sales at my cigar shop were beer and wine, not even liquor. And my insurance, did you know my insurance rates went from $1,500 a year to $28,000?
I think that is a similar story to a lot of places of business across the state.
Yeah, do you think competition lowers the prices with insurance companies, like when we go from 37 underwriters to 2?
I believe in those principles, yes. I believe that when you have a lot of people offering the same services, that if, they have to compete with each other to be able to go and get that business. So yeah, I mean, I'm a free market advocate. I think most everyone in here is, as long as it's fair and above board to everyone, as long as the rules are not tilted in individuals' favor. Yes, sir.
Yeah. Did you know I've spoken to a lot of attorney legislators down here, and they usually tell me how mad they are at insurance companies and how much their CEOs make?
Yes, sir. I've heard that too.
Yeah. I've spoken to a senator also, and that was the first thing out of his mouth. So, well, thank you for speaking up and not being a lawyer and being concerned about this. Thank you,
sir.
Thank you, Mr. Kilmartin. Mr. Guffey is recognized for a question. Mr. Guffey.
Representative Ott, I want to thank you for bringing concerns to the table on this. I sat through the committee meetings in Judiciary as we went through the bill. Would you agree with me that the comment that dollars make sense applies typically within our free market?
Say that last part one more time.
Dollars make sense?
Dollars make sense. Yes, sir.
And as an insurance company or the insurance field, where once we passed in 2017, started requiring these bars to carry these insurance policies, the insurance companies are losing money for every dollar that they're spending.
I mean, I hear you when you say that, Mr. Guffey. I want those things verified. I do take a lot of things that big insurance companies say with a grain of salt, just like I think we all should take a lot of things with a healthy grain of salt.
I hate to interrupt you. Your first 10 minutes on amendment has expired.
I'll take my second if you don't mind, Mr. Speaker.
You're recognized for your second 10 minutes.
Thank you.
Do you know how many insurance companies we had whenever we passed that in the state of South Carolina?
Probably a lot more than we have right now, I'm assuming.
Okay, and I don't have all the information in front of me, but that was one of my concerns, and I want to say it was over 40 companies at the time, and now we're down to very few.
Right. We've got a lot of insurance companies that operate here. The question is, what type of policies are they offering to people?
So, and that's what has to be taken into consideration is the types of policies, these $1 million coverage structures that are offered, and they're not being offered right now but by a handful of insurance companies.
Well, I think we've all had the conversations with our constituents and our business owners about what a burden this has become and how it is an emergency that we need to address. My concern is more or less that government, in my opinion, caused this problem, and instead of going back from us making the mistake and seeing the results, we're adding additional government to solve the problem.
Well, it's always a push and pull, right? We're always trying to find that sweet spot. All I know, Mr. Guffey, is at the end of the day, if we're going to have a successful and thriving state, then we've got to have a successful and thriving business community and business climate and business environment. Because guess what? That's what's going to put our folks to work. Those are the individuals that are going to provide jobs so that people can go out there and live the American dream, so that they can hopefully get a good education in our state, so that then they can stay within our communities, they can give back to our communities, they can go to work, they can take care of their families. That's why we've got to, at the end of the day, support our businesses, is because it's our constituents that are going to work there. And so if we continue to drive businesses out of business and out of the state of South Carolina, how does that help any of us? That's all I can tell you. I mean, it's not necessarily about these theoretical positions to me. I just know that what it takes to have a good state is to have folks that have health care, education, a place to go work, upward mobility, where their hard work can be rewarded, and we can then leave a lot for the next generation.
I appreciate that. My dad always told me you can stay home and not make money. So there's no reason to go to work and not make money. As a business owner, whenever your costs are considerably increased, you have to look at it as, is this worth it? And do I stay in business? Do I get out? Or you have to pass that cost on. And would you agree that the citizens of South Carolina that are already battling inflation, this is just something else that's adding on to it?
Yeah, yes, sir. There's no doubt about that. I mean, it's a great point that I think you make. At the end of the day, that's who's going to bear the cost, right? That's what's going to drive the cost up. That's what's going to drive the cost of that hamburger or that, that beer or whatever else, you name it. When those policy prices go up, if somebody's going to stay in business, a lot of times the profit margins are pretty thin. Don't think it works.
Thank you.
Mr. Gatch.
Really brief, Mr. Ott, thank you for taking my question. We were talking a moment ago, we heard Mr. Kilmartin talk about his increase in rates, and I mentioned there's a guy I know who had it was over hundreds of % an increase in his premiums, so much so that he might not be able to stay in business. So I think that we agree, do we not, that the increase in premiums are pretty scary to some of these business owners who are operating this way. Is that right? You would agree with that, right?
Scary yes, sir. They would be scary.
Yes, sir. So in the letter from the insurance director, I think his last name is Wise, Michael Wise, the chairman had asked, Senator Rankin had asked on behalf of the committee, just some questions about the policy claims, the policyholders' claims. Do you remember the response that Mr. Wise responded with when asked how many policyholders had claims?
No, sir, but would you remind me?
Yes, sir. They don't collect that data.
Don't collect that data.
Isn't that odd?
I agree. I do think it is.
I thought that was odd. And the last thing that I'll say is with regards to the questions you were asking Mr. Elliott, he said, how are we driving costs down? When we reduce these limits, from mandatory, $1 million down, do you think that it gives the opportunity for these insurance companies, knowing that their max payout's not $1 million anymore, right? Their max payout will be maybe less depending on the injuries based on the demands, those types of things. Do you think that if the max payout for those insurance companies is lessened, that they could respond and then lessen the premiums for their customer?
I think that's something that if we pass this legislation, we're going to find out. Again, I think that there are a lot of other things that we can do that would bring insurance companies back, allow them to compete for that business with a lot of other folks. Mr. Gatch, all I can tell you is what is driving it, right? It's accidents involving alcohol. Am I wrong about that?
Well, I thought...
So let me ask you, so is there not things that we can do, Mr. Gatch, to try to cut down on the instances of accidents involving alcohol?
I'm sure that there is.
Right. So why aren't we focusing on those types of things also in conjunction with this? I mean, it's not good that we have an environment that people are able to go out there and, again, costs continue to go up, but there's a lot of people that are getting very rich off of tragedy.
Yes,
and so there's technology right now, right? There's all kind of things that we could do that I believe would cut down on the instances of drunk driving and felony DUI. That's what I think that we ought to be focusing on to a certain extent also.
Yes, sir, and I don't disagree with you, and I'd be glad to work with you on something to that effect for sure, because I think that's very, very important to try to reduce those instances, just like you said, because it reduces tragedy. But as it relates to the premiums, I'm just curious, like I'm sure you are, if those instances really are the basis of the premium hikes when the director of the insurance responds that they don't keep the data of how many policyholders even make claims. So it's a question that you might not have an answer to today, but I know as you and I move forward for the few days that you're here left in this body, but definitely when you get across the hall, that we'll be able to make a difference on this issue. Thank you, Mr.
Mr. Gatch. Appreciate you.
Ms. Calhoun is recognized for a question.
Thank you, Mr. Ott. Did you know that we have 2 restaurants in our family?
And where, Ms. Calhoun?
Pardon me?
Where did you say we have them?
Lexington and Batesburg, Leesville. We have
Yes,
2
ma'am.
restaurants in the family, and my daughter employs roughly 20 people per restaurant.
Yes, ma'am.
The reason I am standing up to mention anything is about the mitigation measures in the bill or the amendment here. And do you know that in our situation, we support the time measures that are in the bill?
Yes, ma'am. I think that's great. I think those are a lot of things everyone will absolutely support. Again, that goes back to what I was trying to say earlier. It's my understanding that there's a lot of restaurants out there that are already doing that. There's a lot of restaurants and bars that are already implementing those types of measures. Obviously, right now, though, there's not much benefit for them to be gained, is my understanding, through implementing those types of measures. So, again, that would be great.
Well, we support the training. We support the less than 40% alcohol sales. This will keep our insurance rates lower at our restaurants. But I try to bring this to the insurance agency's attention. In addition to what Mr. Gatch was saying, I think there's a need for investigations. Oftentimes when events happen at our restaurants and bars, there's no investigation. And our owners are just paying out. And because of that, they get a little check mark beside their names, and then we have establishments who are having insurance rates go up.
Yes, ma'am, and I think there's a lot of times from what I've been told and what I've understood that, guess what? Guess who makes that decision to pay out a lot of times? It's those insurance companies. So that decision a lot of times is even taken out of the hands of the business owners. So I don't want anyone to sit here and think that I'm trying to defend insurance companies. I don't think there's anyone in this room that's doing that. Okay, I think that there's enough blame to go around to a lot of different people, and that is not. And again, some of that blame absolutely is on bad actors in the restaurant business. Again, not standing up here defending bad actors in that business in restaurant or bars.
All right, Mr. Ott, your time has expired on the amendment. Pending question is adoption of amendment number 1. All in favor signify by saying aye. All opposed? Ayes have it. Amendment number 1 is adopted. Next amendment, clerk will read.
Number 2, Weston Newton, number 2.
Mr. Newton is recognized to explain the amendment. Mr. Newton.
Thank you, Mr. Speaker. Ladies and gentlemen, this is a simple amendment. During the ad hoc committee process, as Mr. Elliott explained, many questions were raised about how premiums were derived, how the risk was evaluated, and the answers always were that that's proprietary and can't be discussed. But there was also suggestion that we had strict liability with regard to alcohol in South Carolina. That's not factually accurate, but because we have different language with regard to beer and wine and alcohol, the beer and wine statute says may not knowingly sell. That's Chapter 4 of Title 61. Chapter 6 of Title 61 regarding alcohol simply says may not sell. However, the Supreme Court has interpreted that as a know or should have known standard. So to the extent that what we're trying to do is affect the way premiums are established and risk evaluated, and there is a suggestion that it is a different standard than is in the statute. This is a simple amendment that adds the word knowingly, just like exists in Chapter 4. To be crystal clear, we do not have strict liability in South Carolina. As Mr. Elliott explained earlier, there is a negligence requirement and proximate cause. Move for passage, Mr. Speaker.
All right, pending question is adoption of Amendment 2. All in favor signify by saying aye. All opposed, ayes have it. Amendment number 2 is adopted. Next amendment, clerk will read.
Amendment number 3 is Representative Elliott.
Mr. Elliott is recognized to explain amendment number 3. Mr. Elliott.
Thank you, Mr. Speaker. This clearly spells out, it was a Scrivener's error in Section 5, the enactment or the effective date of the law of the bill. It would clearly state that it's effective upon signature of the governor.
Pending question is adoption of amendment number 3. All in favor signify by saying aye. All opposed, ayes have it. Amendment number 3 is adopted. Next amendment, clerk will read.
Mr. McCabe, number 4, Mr. McCabe. Thank you.
Mr. McCabe is recognized to explain the amendment. Stavronakis, for what purpose do you rise?
Point of order, Mr. Speaker.
State your point.
Mr. Speaker, the bill substantially relates to insurance premiums, and sets out standards for the mitigation of insurance premiums. The amendment, as it reads, substantially relates to liability issues and how to define under state law liability standards in South Carolina. One is, again, insurance law, largely in Code 61, and this is in Code 15 dealing with liability. I believe it is not germane to the bill.
All right, Mr. McCabe, will you wish to address that point of order? State your point.
Yes, sir. Can you get him to clarify the specific rule?
He's raised germaneness under Rule 9.3.
Okay. So the purpose is to make insurance affordable for establishments serving alcohol. This amendment would decrease the legal liability for the establishments as far as the liability faced by these establishments, and therefore it would reduce the insurance premiums. The title of this bill is Fair Access, and so what this would do would apply the same standards to establishments serving alcohol as it does for those that do not serve alcohol. It serves the purpose of this bill is germane because it lowers the amount of premiums that would be paid by establishments serving alcohol.
All right, anyone else wish to be heard on this amendment? All right, stand at ease. I got to understand, Mr. Crater, will you come up here and show me which one's the amendment we're working off of? No, I understand. All right, members, this is germaneness, and the standard is the substantial effect of the bill. The substantial effect of this bill is talking about risk mitigation in the insurance section, not the alcohol section. Mr. Stavernakis, 61 is the alcohol section. This is in section 38, which is the insurance statutes. In here it's talking about risk, and it has everything and the substantial effect of this amendment that's adopted and this bill is about liquor liability insurance, or liability insurance, what we term as liquor liability. What Mr. McCabe has offered is an amendment under 1538 15F and striking a section which is the joint and several statute, the substantial effect of this bill has nothing to do with the joint and several statute, so thus I sustain the point of order. Thank you, Mr. McCabe. Next amendment, Clerk will read.
Out of order, bringing us to the last amendment, 5 substitute. Mr. Caskey.
Mr. Caskey
5 substitute.
Mr. Caskey is recognized to explain 5 substitute. Mr. Caskey.
Thank you, Mr. Speaker. Ladies and gentlemen, when we adopted Amendment 1, the committee report, one of the things that was a part of that was the different criteria that one could exercise to become eligible for the liquor liability mitigation program. And specifically, one of them referred to the fact that you could become eligible by having less than 40% of your sales derived from alcohol. And so this amendment clarifies, it makes clear for a new model of businesses that have opened where they serve alcohol on premises, but they bring in third-party vendors to sell the food. So food trucks are sold, and their business model contemplates having the food truck provide the food at that venue. And so this makes clear that in calculating the total sales there, the food should be counted even if it was sold on a food truck. And that's pretty straightforward, at least as straightforward as I can make it. If there's any questions, I'm happy to do it. Otherwise, I would ask for your support.
Seeing no questions, pending questions, adoption of Amendment 5 substitute. All in favor signify by saying aye. All opposed, ayes have it. Amendment number 5 substitute is adopted. Are there no further amendments? No further amendments. Pending question is adoption, second read of House Bill 5066. Roll call is required and ordered. Voting on the board. All members voted? Oh, no, I'm sorry. I should have looked up. All right, have all members voted? Any objection, cutting roll call short? Hearing none, polls closed. Clerk will tabulate by a vote of 106 to 2. House Bill 5066 receives second reading. Mr. Elliott requests unanimous consent to give the bill third reading tomorrow. Is there an objection? Hearing none, adopted. So ordered.